Today in the grain market, soybeans were mixed. Those exports were the largest and commitments were the lowest since 1991. So we've got a lot of extremes going on. The challenges that we face today, even though that we've traded higher at the beginning of the day, that support that was the strength of the soy meal market that really had the market really looking strong to start off with, but then a little bit of a sell-off came in. I think that there's real concern that there's going to be a drop in beef demand, thereby meaning there's going to be a drop in demand for soybeans, and all those things start to pile on top of each other and start to move the market a little bit lower. There's definitely other outside influences that are affecting the market as well. Now, corn was easier today. Uncertainty is growing as the coronavirus is expanding. And I think that there's some difficulties with that market, but it is remaining in that consolidative 15-cent range. So that's one positive to look at. But I think that there's other things that also drive the market. And we've been attached to the headlines right now. We've been really looking for direction, like everyone's looking for market direction. And of course, with the onset of the coronavirus and the oil war, that really threw everything upside down. Here we are at the end of the week, the market kind of stalling out, moving sideways. And next week starts the new month. We're going to get the USDA reports coming in. So that should give us a little bit more of an idea of which way we're going to go fundamentally. But momentum is also building based on what's been happening in the country. And with the unemployment rate just skyrocketing, there is some challenges as to whether our domestic demand is going to be affected as well. So there's a lot of things in play right now. Definitely all eyes are going to be on the acreage and the stocks report coming up next week. So that's one thing to watch. Now, wheat was higher. That's been the strongest of all. The demand optimism is really underpinning the future and kind of like pushing it higher still, moving it ever so closely to that $6 mark, which is such a surprise. All three exchanges are on board. They have plenty of strength. But let's face it, supplies are plentiful, and U.S. prices are really overvalued based on the global economies. And so what's really happening here? It's just there's a lot of momentum in this market, and no one is taking their foot off the gas. It seems that that's stronger than ever right now. And with the U.S. dollar index really coming off that 100 mark, might be giving it a little bit more of a boost. And they're just not looking back right now. So that could be the one saving grace really for all the grains. But right now, I think that uncertainty is what's driving the market, and it can go on both sides. So be careful, because volatility is here to stay. And I suspect that a weekend is an eternity these days. So next week is a lot of volatility. I can promise you that there's going to be plenty of that when Monday comes.